On to the general market stuff, Tom Lee said. So the catalyst is the refinancing, number one, and then number two, as the chips do roll in, you're going to see. So the dealer inventories are starting to tick up, which shows me that although they're hugely depressed from historic levels, it just shows me that they have had the production kicking up. People are more optimistic in those last 4 weeks of Q2. The first 2 months of Q2 was a disaster because China was shut down. They couldn't get chips. The chips started to roll in major form in, I would say, June and probably July. So we'll see what their guidance looks like, but I think they're going to have a much happier look on things than they did probably the first 2 months of Q2 when they were giving the last earnings call. So that'll be nice. And I do think, like Alibaba, I do think this earnings call is a little bit earlier than they normally report after the quarter. So usually that's they're not eager to move the date up if they have bad news to report, but we'll see tonight. I mean, their earnings report is not the catalyst. The catalyst is the refinancing, number one, and then number two, getting the chips in over the next 3 to 5 years and getting this thing back to a normalized EBITDA, 250, 350 million of EBITDA, $9 a share of earnings, 10 to 20 times multi-bagger, and these things are going to happen in rapid order in the next 6 to 12 months in our view.